There is nothing so useless as doing efficiently that which should not be done at all. What we do here every day charting these markets 10 to 15 minutes, we have honed it down to the razor's edge so that you can spend your time efficiently going through these charts, starting, as we always do, looking for weekly vertical crossovers on the weekly chart, focusing primarily on the price percent oscillator, our master indicator, also using all the charts all the time with all the indicators. That includes not only the percentage version of the MACD, which is the price percent oscillator, the derivative oscillator, the Bollinger Bands, the Heikin-Ashi candlesticks, trend lines, and of course the mastering things, that is the weekly vertical crossover and the 2-day recrosses. Let's jump into these charts. Don't forget, everything we teach you here can be used on any stock or ETF that is trackable. And again, that is the main thing. It's got to be something that gives you accurate vertical crossovers, and there are thousands of them. But you got to know what you're doing. That's why we wrote a book. That's why we're here every day. You want to supercharge your training? Buy that book. That's one great way for you to support the free work we do here every day. Now, let's jump into these charts. What do we see going on? Stocks and bonds up, gold down. Just as an aside, Bitcoin up. Now, Bitcoin took a big hit a few days ago, and again, it has nowhere near recovered where it was. Don't think there's a reason to be buying at this point, but we'll talk about that. We'll look, and again, the caveat is we're not a stock calling service, we're not a Bitcoin calling service, we're an education firm. We talk about purchasing, we're talking about you doing practice trades, paper trades. Okay, let's jump into these charts. We see the price percent oscillator flat on the S&P 500 on the weekly chart. We have not reached a higher high so far this week. 380.86 last week, 381.49. We do have a green up candle. The body of the candle's higher than the prior week. Price percent oscillator, even though it's flat, is still positive. Derivative oscillator gaining upward momentum. Let's look at the 2-day chart. Now we can see where things peaked back on that 2-day candle from last week, representing Thursday and Friday. That's the 7th and the 8th of January, respectively. What's it done since then? It's been sliding sideways. We do see that 2-day candle is crossing over. And again, the actual crossover did occur at the close of the market on Tuesday. It was higher. I called that for you guys. Wasn't excited about it. But again, I'm moving things I shouldn't be moving. I will go ahead and adjust also our arrow to make sure that's in the right direction. And let me fix the weekly trend line that I moved. Easy enough. That's what's so wonderful about the paid version of freestockcharts.com TC2000. It's just beautiful. It's so easy to use for just a few dollars a month. There is a coupon. You can use the code that is in your show notes. It'll give you $25 off when you're ready to get serious and subscribe to TC2000. By the way, most stock charting services don't offer you the price percent oscillator. They don't offer you the derivative oscillator. Of course, these are two of dozens of indicators that are available. And of course, when you do subscribe, you see in your show notes the link so you can have the charts we have for free. You don't have to set them up. You can just paste them in. Now, let's talk about what's going on the 2-day. It has crossed over, still very, very weak. Derivative oscillator gaining some upward momentum. If you did not jump in, it's still so close. You might have a jumping in point tomorrow afternoon. Again, I'm encouraging you to come up with good reasons to practice trade it, and to note those in your notes to learn from this. How do you do that? You use your trade worksheet. And again, I'm going to put at the end of today's training the trade worksheet, how to use it, along with some other great trainings for you. Oh, and for subscribers, there is an unlisted training that we are providing you today, Finding Your Own Aha Moment. You become a subscriber for free by just going to chartingwealth.com and signing up. That list is never spam, never sold. So we see a sideways slide underway with the 2-day recross going up. Now, as we look at the half-day chart, a potential reason you might not be all that excited about jumping in. It is still positive. It is heading down. Derivative oscillators trying to go negative. Did go up a little bit at the end of the day, though, after rolling over, so it's trying to oscillate up some. But you have just that headwind from the past. So we'll continue to watch and see. I'm not discouraging you from giving things a practice trade for learning. Of course, our 2-day recrosses, we like them to be much stronger than they are, but you might be able to make a good case for jumping in based upon how accurate the prior 2-day recrosses were. Going back and looking back in time and seeing how many of those you have and how accurate they were. You do that per chart, okay? Every chart has its own personality. That is why we say 10 to 15 minutes a day charting the market. Those are the ETFs and stocks or stocks that you are interested in. We focus on 4 just because we chose them, just because we want to give you continuity so you learn the nuances, the personalities of those particular ETFs and or stocks. If you have your own favorite, put them in your mix, but make sure to look at them every single day. That's where we are on the S&P. Let's go to the NASDAQ 100. By the way, S&P up 0.27%. NASDAQ, which is represented by QQQ, the Qs, the cubes, whatever you want to call it. I call it the Qs, up 0.68%. Now, when we look, we can see that things have been laminated for quite a while, but the market's been going up, okay? We had that crossover back on the week ending the 18th of December. Did quite well for us, jumping in point around the 307 mark. The high, 319.39. Not saying you were going to catch all of that, but a nice little chunk in the middle is beautiful. What do we see going on right now? Well, we were taken out of the trade when that 2-day chart crossed over going down. That was the last point you wanted to be in it. You might have captured some profit before then. But let's talk about where we are right now. We look at the prior high was what? Prior high was 319.39. Now again, I'm just looking in the aggregate. I'll get into the 2-day in just a minute. High so far, 317.19. So we see a sideways slippage and down. That price percent oscillator is still positive, but is trying to move over, trying to cross over, it looks like. We see the derivative oscillator a little, just barely less than flat. So that's not a great sign on the weekly chart. 2-day chart, of course, is still negative. It went up and then bounced off. So again, not a good sign either. Haven't reached a higher high there. That prior high was on the Thursday-Friday candle of the 8th. Now, of course, that did occur after, so that's not fair to say we could have captured that. Our prior high would have been somewhere in the 315, 314 mark. So, okay. So, want to make sure that we are straight up on where we would have gotten out, and then it actually reached a high after that. You might say, but wouldn't you just stay in? No, not when you see your 2-day pulling back on you. We've adopted that rule, and it has served us well as your last line of jumping out of a trade before you go into danger territory. So again, those rules are there because they work. If you practice them long enough and you use them, you will see that they work. Again, we ask you to prove all of this to yourself by practice trading. If you are here thinking you're going to learn a couple of quick little tips that are going to allow you to go out into the marketplace and be successful, my friends, you are gambling. That is not what we do here. We have our rules because our rules work. And when our rules stop working, we change what we do. So far, so good. Now, that's where we are on the 2-day chart. Still negative, still not in that trade. We look at the half-day chart, and it is still below the red signal line as far as the price percent oscillator goes. It did bottom out going down, most recently back on the morning of Tuesday of this week, and then up in the morning a little further up in the afternoon. So we're still watching the cues, waiting to see what's going to happen. Is there going to be a weekly vertical crossover sometime soon, perhaps at the end of the week? Or is there going to be enough of a recovery that we have a 2-day recross going up? Don't know. We shall wait and see. Let's move on to bonds. Bonds up for the day, 1.13%, still a down week. A lower low so far this week and a red down candle. Price percent oscillator still heading down. Derivative oscillator gaining downward momentum. Price well below that weekly trend line. 2-day chart. First day of the latest 2-day candle, we can see the price percent oscillator slowing down in its down movement. And slowing down from that angle, and the derivative oscillator also slowing down its downward growth. So it's still moving down a little bit, but not a lot. Look at the candle that's forming right now. That's a doji. Means lots and lots of indecision. Still below the 2-day trend line, but we can see a lot happening there. So we'll pay attention and see what it does. As we look a little deeper, that's when we can see where things have bottomed and for the day moved up. Still below the 2-day trend line, well below the weekly, but we did have a crossover going up at the end of the day. So we shall redraw our trend line for the 4-hour or the half-day chart, and we'll pay close attention as to what happens there. So again, if you were in that down trade going short, do just pay attention. We can see significant weakness in the price percent oscillator. It's still negative, so keep your eye on things. Watch that doji. See how this candle finishes forming on Thursday. Now, lastly, next to last, we go to gold, down 0.43% for the day. Gold has been going down over the last 2 weeks very strongly. This week, solid green candle means a slowdown in the down movement. Still a down candle, just a slowdown there. Price percent oscillator looks like it's definitely, doing, somehow I ended up on the 2-day. Sorry about that. I was like, how did that happen? Well, we didn't have that much down movement in gold. Yes. So when things don't make sense, look at where you are. What do we see going on? We have a red down candle, price percent oscillator still negative and still heading down. Derivative oscillator losing downward momentum still. And at some point we're going to redraw, and this is part of my problem when I looked at this, is we need to redraw our weekly trend line. I should probably just move it to stop confusion. I just hate to have, it's not a big deal. Let's just get rid of it. So the reason I'm doing that is I don't have the ability to really draw a good trend line because it was up the last 5 weeks, but there was no crossover. So as that draws better, I will put a new trend line back in there. What do we see on the 2-day chart? That's what I saw before, where we're having it getting close to crossing over, going down. This is what we've been warning you about to pay attention to. You may very well have a 2-day recross going down, which on Thursday afternoon would give you a potential shorting opportunity for gold. Talked about that yesterday. How do you short gold? You short gold with a put. And again, if you have our Options Made Simple training that's available at any of the levels for our Patreon support, great training there. Have received nothing but praise and accolades for that. Want everyone to have it. As soon as you sign up as a Patreon member, we ship that out to you immediately and want you to have it. It is extremely important, and I say ship it out. We send you a link to it so that you can take it right away. It's hard to, I can't find an inverse fund in gold that isn't illiquid. ZDG is one. Too illiquid to get into. You take too much of a loss just jumping in. So keep your eye open, mark your calendar, set the alarm for 3:45 tomorrow, see what gold's doing, and if you have an opportunity to do a practice trade, put on gold for more down movement. We'll see how that works out. Derivative oscillator negative. Price percent oscillator trying to cross over that candle. Will finish drawing on Thursday. How about the half-day chart? Got to take a quick look at it. You can see where the market's already bottomed up in the morning and then pulling back a little in the afternoon, down for the day. Like I said, 0.43%. I'd like to see that stronger. Derivative oscillator losing downward momentum. Price percent oscillator still ever so slightly heading down. So we'll see what happens on Thursday. Check it out toward the end of the day. See if you have an opportunity to practice trade. Lastly, we go to Bitcoin. What is Bitcoin up to? Price percent oscillator trying to head up some. It's been up these last couple of days, if I remember correctly. We can look at that in a minute after that big downturn. But we see the price percent oscillator still a little greater than flat. Derivative oscillator losing momentum. And again, we can see where the high the high 40,793. And of course, again, Bitcoin not perfect as far as tracking goes because it's reported differently in the NY. The New York Stock Exchange Bitcoin Index tries its best to track it. The numbers are accurate, just the timing is a little bit different. We work with it. What do we see? We see where Bitcoin peaked. You can see it better here on the 2-day chart on that Thursday, Friday candle. And then we can see where things started losing momentum and breaking down. Now, again, the 2-day chart still positive, but again, last thing you want to do is try to catch a falling knife because the price percent oscillator is heading down. Derivative oscillators losing momentum. Whenever things get too heated, they tend to go way up and then drop off. We look at the half-day chart. What do we see? That's where we see the real falling knife on Monday morning and then hammering down Monday afternoon and then just sliding sideways trying to move up some. But where things are on the half-day chart, where things are on the 2-day chart, the candles that we see, there's no realistic way of making any good decision about getting in right now. Okay? We've seen the highs hit, and now we see some profit taking perhaps taking place, things digesting. So again, we don't have any way to make an intelligent decision on jumping in. That's just where it is. So again, where were your jumping in points? We had some beautiful ones. We had a great one back on Thursday, the 17th of December, somewhere around the $21,000 mark or so. And again, remember, hit a high of 40,793. Of course, you go to the weekly chart. When was the last weekly vertical crossover? Well, my friends, that was back on the week ending the 23rd of October, somewhere around the $12,000 mark. So again, these charts, they can be very, very good, but you know what you have to do? You have to follow them. And if you're interested in Bitcoin, you ought to be following them every day using what we teach. Practice trading, making sure you know what you're doing by testing yourself. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.